What's going on, everybody? Shiraz Ahmed here, and today we're going to discuss the actions that have been taken by central banks, including the Federal Reserve in the US, to prevent what could become a potential global banking crisis while also still combating our unfortunate inflation problem. Now, we're going to focus on the recent collapse of Silicon Valley Bank and the increasing scrutiny on the struggling European bank, Credit Suisse. So let's dive in. All right, welcome back. So for those of us who've been around the financial block a little bit, this really isn't our first rodeo. And the current environment and banking crisis that seemed to pop really out of nowhere is starting really to sound a little too familiar. Now, Mark Twain once said, "History never repeats itself, but it does often rhyme." All of a sudden, we're seeing financial jargon terms like credit default swaps and mortgage-backed securities that are making headlines once again. And it's rightfully bringing back some serious PTSD memories that a lot of us have been frankly trying to forget. So I actually did a bit of a deeper dive into the series of events leading up to the Silicon Valley Bank collapse. So if you want to check that video out, click here and I'll take you over to it. Now, the situation we're currently seeing is unfortunately spreading a little bit wider. Now, I know what all of you are thinking. Didn't we already see this movie and we already knew how that one ended? So frankly, it really wasn't awesome. How on earth are we back here again? And really, is this time going to be any different? Okay, so let's start by talking about what central banks' real dual objectives are, and a little bit about the SVB collapse and now what's going on with Credit Suisse. Now, central banks like the Federal Reserve have a primary objective to create maximum employment, price stability, and financial stability. Now, central banks today are grappling with really stubborn high rates of inflation that have really not been seen in nearly 40 years. Now, they have aggressively been tightening monetary policy, such as raising interest rates at an alarming pace, really to address this problem. Recently, however, the plot really did thicken with the collapse of SVB Bank due to what can only really be described as really poor risk management on SVB's part and a crisis of confidence that led to a good old-fashioned bank run. So the next thing to keep in mind is bank failures and market reactions. So the failure of SVB and then subsequently Signature Bank, the second and third largest bank failures in US history, really shook investor confidence around the world. Now, at the time recording this video, Credit Suisse, which is a 167-year-old European bank, is also currently teetering on the brink of failure, raising concerns about the health of the global financial system. Now, despite being unrelated to SVB's collapse, Credit Suisse's simultaneous problems have intensified scrutiny of the Swiss bank and fueled market anxieties. Now, stocks around the world have been dragged down by large and small banks alike, with the market sentiment really kind of fluctuating between all out panic and then sort of periods of calm. So the next thing to keep in mind is what authorities' intervention and global implications could be. So Swiss authorities and central banks have met with Credit Suisse's leaders to discuss options for stabilizing the bank, recognizing its importance in the wider financial system. With over $500 billion in assets and over 50,000 employees worldwide, Credit Suisse's collapse would have significant global consequences, similar to a domino effect not really seen since the 2008 financial crisis. Now, this bank is considered to be a global systemic important bank, or GSIB, meaning its failure could spark concerns about the stability of the entire global financial system. So the next thing to be aware of is balancing inflation, financial stability, and really regulations. Now, central banks, including the Fed, can still address inflation while shoring up the banking sector amid concerns about this Credit Suisse crisis that's happening right now. Strengthening regulations and supervision of large financial institutions is really essential to prevent future crises and maintain financial stability. But here is the catch-22. Central banks have aggressively used their policy tools to combat the highest rate of inflation that really been seen in decades, kind of effectively reloading their stimulus gun that they ended up firing all their bullets back during the COVID pandemic. So loosening monetary policy before seeing measured inflation decrease could potentially worsen matters. So really, they're walking a super tightrope, and frankly, I do not envy being a central banker right now. Okay, so the next thing to also understand is the Bank Term Funding Program and other central bank actions that are being taken right now. Like, what are we doing about this? So to address the recent banking concerns, the Federal Reserve announced the creation of the Bank Term Funding Program, or BTFP. Now, this program provides one-year loans to banks, credit unions, and other financial institutions that offer collateral such as U.S. Treasuries, agency debt, mortgage-backed securities, etc. This move aims to prevent a liquidity crisis in the banking system and a severe tightening in monetary policy. Similarly, other central banks worldwide are taking measures to stabilize their financial systems and ensure that the banks can weather the storm. But let's be real here, they are probably sweating bullets right now behind closed doors. We're just not seeing it. So a couple things that I want you all to take away from this are some lessons from pop culture and really what the role of the central banks are. So movies like The Big Short or Margin Call have really taught us that the financial system can be fragile and that greed, poor risk management, and really a lack of oversight can lead to disastrous consequences. Now, in today's real-life financial drama that we're living through, central banks play a crucial role in ensuring the stability and preventing crises. Now, they must strike a real delicate balance between combating inflation, maintaining financial stability, and ensuring that there are proper regulation of large financial institutions. All right, so there you have it. Central banks worldwide are actively working to maintain financial stability amidst an ongoing banking sector challenge, while also still trying to combat inflation. As we're navigating this ever-evolving landscape and situation, it's really critical to stay informed and financially literate. Now, while the current environment does sound similar and has parallels to 2008, at least at this point, it seems to be far less severe. So being cautious is my best recommendation for everybody right now. And keep in mind that our emotions are really what we need to keep in check, especially when we're making decisions. So I can't stress how important that's going to be for all of us going forward. So thanks for watching to the end of this video. I appreciate the support, and if you like the content that I've been creating, please consider hitting that like and subscribe button, as it really does help out the channel. Now, the bell icon will keep you notified when I upload new videos, which is weekly. I'll also put my contact details at the end of this video, so drop me a line if you have any specific topic requests or you have any individual questions. Until next time, stay safe out there. Bye for now.